Ladies and gentlemen, many of you watching today's video on Next Coin Hub might not realize this yet, but you're actually not bullish enough on what's unfolding right now. The reason I say that is simple. The world's leading economies and the largest companies on the planet are pouring massive amounts of money into the crypto space. These aren't small, quiet investments. We're talking about multi-trillion-dollar commitments, the kind of money we've never seen flow into this industry before. So let me explain why my outlook on the market is growing increasingly bullish, and why tomorrow's upcoming decision from the Federal Reserve on rate cuts could be one of the biggest catalysts for a historic bull run. But before we let the excitement run too far, I also want to share some alarming data later in this video that every serious investor should consider before charging blindly ahead. Now let's start with the big picture. The United States and the United Kingdom are preparing to announce a new crypto cooperation deal. While details are still developing, it almost certainly ties back to stablecoins. The US has been openly pushing to integrate stablecoins into the financial system because every stablecoin backed by the dollar is essentially tied to US treasuries. For Washington, this creates stronger demand for its debt while reinforcing dollar dominance globally. For banks, it provides immense liquidity that can be used for deficit spending. And for everyday people, stablecoin payments could mean faster, cheaper transactions with fewer restrictions than the legacy system. If every major bank were to fully adopt dollar-backed stablecoins, the benefits for the U.S. economy would be massive. And this isn't just an American play. Other countries are starting to realize the same thing. Some nations will choose to launch their own stablecoins linked to the dollar, while others will tie them to local reserves. Either way, the world is moving in that direction. Meanwhile, investors are positioning themselves. Gold is being bought at record levels. Stock market inflows are surging. And yet, crypto is still only receiving a fraction of that volume. Right now, XRP has been trading just above $3, which is an impressive rally. But when compared to the sheer trillions flowing into other markets, it feels like crypto hasn't even gotten started yet. And if you've been around long enough, you know markets move in cycles. First gold, then equities, and finally, crypto. We are approaching that crypto cycle now, and the amount of volume preparing to flood in could be unlike anything we've seen before. On top of this, we're watching huge tech companies quietly lay the groundwork for adoption. Google, for example, is partnering with Coinbase to enable crypto payments through its new AI payments protocol. At first, this is just an experiment. But if users embrace it, the next logical step is integrating crypto directly into Google Pay. That would instantly expose billions of people around the world to crypto transactions. The potential volume from such an integration could be staggering. It doesn't stop there. Crypto leaders like Michael Saylor are also stepping up, pushing legislation forward in the U.S. to establish a strategic Bitcoin reserve. Imagine the federal government committing to buying billions of dollars worth of Bitcoin regularly. That kind of demand would push Bitcoin higher, and naturally, that money would flow down into Ethereum, XRP, Solana, BNB, and other major altcoins. Governments have the power to make these moves, and they're exploring exactly that. For the crypto community, this would be one of the most bullish developments possible. But here's where caution comes in. The banking sector is under extreme stress. Unrealized losses on investment securities for U.S. banks hit nearly $395 billion in the second quarter of 2025, 6 times higher than what we saw at the peak of the 2008 financial crisis. To put that into perspective, this marks 13 straight quarters of mounting losses. Meanwhile, the FDIC's problem bank list has grown to 59 institutions, representing over 1% of the system. These are not small warning signs. They're flashing red alerts. If the Fed doesn't step in to cut rates soon, the pressure could trigger a financial meltdown worse than 2008. Think about what that would mean. The scale of stimulus required to keep the system afloat would dwarf anything we've seen before. The only logical path forward is rate cuts. And while that comes with risks of its own, it also injects fuel into risk-on assets like crypto. That's why this week's Fed decision is so critical. Now, I want to bring this back to XRP. We've seen it rally from the 2.95 level to around 3.05 plus in a very short window. Even a small move like that can produce outsized gains when compounded by leverage or smart trading strategies. More importantly, it's a signal that XRP remains responsive to macro shifts and market sentiment. With trillions in liquidity preparing to rotate into the crypto space, this is the kind of early movement that often precedes much larger breakouts. The big takeaway here, and the reason we're covering this on Next Coin Hub, is that the crypto market sits at the intersection of unprecedented opportunity and significant risk. On one side, governments and corporations are finally pushing for adoption, laying down infrastructure that could pull trillions of dollars into digital assets. On the other side, the global banking sector is fragile, and missteps from the Fed could trigger shocks that no one is fully prepared for. For XRP holders, this is a reminder to stay alert. The setup we're seeing now could open the door for the next explosive bull run, but only those who navigate carefully will capture the full upside. The months ahead are going to test patience, discipline, and conviction, but they could also reward it with life-changing gains.